I'm joined by Bill Lenehan, CEO of Four Corners Property Trust and a member of the board of directors of Macy's. So Bill, your company is around the 1-year mark as a standalone company. How would you describe the progress that's been made when it comes to executing strategy?
I guess I'd describe it in a couple of different stages. When we were first spun off from Darden, we had a lot of work to do to establish our team, work on our accounting and systems, and get situated on our business planning. Through that process, we really dug into the restaurant space, identified acquisition targets, and waited for our cost of capital to get in line where making acquisitions would make sense. In the spring, we built an acquisition team and began working on acquisitions. You've seen recently we've closed on several dozen properties, we've sold a couple of properties, and now we're in much more of a steady state of growing the portfolio and diversifying. And
as a net lease company, how much of your business is real estate and how much is credit?
Really, when we make acquisitions, the first thing we're looking at is this strategic? Is this providing diversification into other restaurant brands? But from there, we look at it as about 50% credit. Those are factors like how durable is the brand, who's the guarantor, and what's rent to sales. And then about 50% real estate. That's location, reuse potential, length of the lease, and rent growth. So we take a fairly balanced approach and we look at each property on those merits.
And as you review these acquisition opportunities with restaurants, what are the key factors that might sway you?
We tend to stick to household brands. So these are brands like Taco Bell or Burger King, Wendy's. Durable, large brands with hundreds of units, or if not thousands of units. And then we look at the guarantor. Who is the franchisee typically, or the corporate? What's their debt rating? What's their credit profile? What's their net debt to EBITDA? And then we look at how is the trend of the 3-year performance at the restaurant level been? Is this a store that's performing above or below brand average? And then we look at things like, is it a hard corner? Is it a signalized corner? Is the property well located? The name Four Corners Property Trust is there because we like to buy properties on signalized hard corners. That's a key attribute to strong retail. And then we look at demographics. But then we look at also, as I said, these real estate factors that are manifest in the lease. How long is the lease term? Is it truly triple net? What's the rent growth? What's the substitution provisions? So we take a deep dive at every property into that lease, into the guarantor credit, et cetera. And thus far, we've purchased approximately 50 assets. We've sold a couple as well, averaging in the mid to high 6 cap rate range, with typically very long leases, most of them near 20 years.
Well, Bill, thank you so much for your time.
Thank you.
And for more on this and other real estate news and analysis, be sure to visit REIT.com.